Welcome back. You're with Trading Hour, an over 2% cut across the board with the market breadth in favor of declining stocks. So let's talk about how things are looking with Rajesh Bhatia, MD and CIO of ITI Long Short Equity Fund. Hi, Rajesh. Thanks very much for joining in and good morning to you. What's the market setup looking like to you? And, given the kind of volatility we've seen, I mean, where are things headed?
So just, I think let me put a few things in context. In a day like this, when markets are down significantly, I think investors should kind of remind themselves that India, we are lucky to be in a Indian economy and have the opportunity to play the Indian capital markets because we are a $3.5 trillion economy. We will be the fastest growing economy in the world. We have a lot of work that is done in the past in terms of GST, RERA, tax cuts, labor reforms, all of which will pan out the PLI schemes in the future. So a lot of benefits are really going to accrue to us in the future. Our NPA cycles are down. We have a bankruptcy code. So a lot of good work has been done, and I think India is a fantastic opportunity as a country and as capital markets over the next 3-5 years, etc. The second point I just want to kind of draw to is that we are a long short equity fund and we necessarily have a fairly tactical view of the markets. Having said that, I think, today equity markets are facing the most toughest challenge in over 2 decades. I think as market participants, we tend to focus more on earnings. See, the market change in market prices are driven by EPS change and PE change, right? And we tend to focus more on EPS change. I think we have to recognize that these are extremely macro-driven markets, driven by monetary policy and fiscal policies of the developed world. So from April 2020, we saw a change in P, a re-rating of the equity asset class. And now we are seeing the reverse. Because as inflation is galloping, there is a need for the development country banks to change that accommodative policy to significant tightening. They are clearly significantly behind the curve. That is going to have an implication on the markets. It is not something that we have seen in at least 2 decades or even longer than that. Given that context, the extent of tightening, the duration of tightening, etc., will also guide our markets as we move forward. And that's why I think it's necessary to kind of take it as it comes, but the risks are front-ended, driven by this change and tightening in monetary policy of the developed world.
Rajesh, great to hear your perspective on the overall market setup. But I think a lot of our audience and viewers want to know what to do. Now, you run a long-short fund. Could you tell us, what are the sectors, themes that you're bullish on? What are the themes that you're negative on? And you expect a downside from here on?
Sure. So yes, I think the challenges are front-ended and there is a challenge to the market, even as we speak. The sectors that we are negative on, that's really what you would want to hear. In an inflationary environment, you want to short companies or sectors that don't have pricing power because costs are going up. So in case they are not able to pass on those costs, their margins and therefore profits are going to contract. We see that now in several capital market oriented businesses where pricing is challenged. More recently, you have heard of the diagnostic sector where, pricing is going to be challenged because there are newer entrants who are coming into this sector. Now, just for context, the diagnostic sector, if you look at the profitability, there are players with 70 to 20% PAT margins. These are one of the highest margins that you would see in corporate India. Now, what implication it has, we will see. But these are some of the things that are vulnerable. And especially given the context that we are coming from a highly valued market, the valuation buffer is also there to short some of these sectors as there is increasing price competition. There is increasing price competition in our view in consumer electronics as well, even as they navigate a challenged consumer and cost of increase in cost of goods. So some of these themes are areas where we are short on or negative on as you move forward.
Good to hear that. Thank you very much, Rajesh. Unfortunately, out of time. It's a brutal sell-off that we have on our hands. It's 360 points down on the Nifty with the Sensex edging towards a 1,200-point cut. We're out of time on Trading Hour. From the entire team, thank you for watching.